Good morning. Good morning. Good morning. Good morning, Mr. Obadala Gideon. Good morning, sir. So we're gonna get started now, right? I'm just trying to wait for the others to join in. By the way, Mr. Obalola, how has trading been for you? How's it been? How's it been for you? How's the Trump market been treating you? Because at this point, we'll just call this market Trump market, right? Because I think it's just Trump that is controlling the market now. Before, like you would set up your technicals, you draw your demand zone, supply zone, support and resistance, and then Trump will just tweet, and boom, everywhere will scatter. I think this is the season, and at this point, if you're a trader, you need to. This is the time for you to be very smart. You need to be very smart as a trader. Just come, you've missed a lot because. Oh my God. Okay, so you've missed a lot because a lot of things has happened between the past few days. Oh my God, what's wrong with? All right, I'm getting an error message over here, so I need to be sure that I'm still connected. So if you can still hear me, can you quickly drop something in the chat? If you can still hear me, I need to be sure that I'm still connected. I'm getting an error message over here, right? If you can get this, what I'm saying now, can you quickly put something in the chat box? Oh, that's perfect. That's perfect. That's good. That's good. That's good. All right. So as I was saying, it's been a Trump market, and I mean, in this kind of market, if you really want to make profits, you don't want to joke with your risk management. Now, I would explain something, and that's what a lot of you actually. That is what is still missing in your trading journey so far, and I'm going to be explaining it today. Now, at this time, market has been moving erratically. It has been showing us erratic behaviors, right? I remember I posted something on my status yesterday when the Jazzy posted that all these forex with your higher highs and higher lows, Trump will just come and then boom, higher high will turn to most high. I posted something like that on my status yesterday. It was just that tweeted it or something. Now, in this kind of market, you want to take your risk management seriously, because if you are not careful, you get wiped out. And I realize that a lot of you have been going about trading the wrong way. That's why it doesn't matter the signal channel you join, you will still find yourself unprofitable because you are not applying a proper money management. Now, I'll give a simple scenario. Let's imagine that we have someone over here that has, let's imagine we have someone over here that has $100 in his or her trading account. Now, this $100, is not significant. For example, I posted two setups yesterday. I posted one that has on gold that has 275 pips stop loss. Now, when I posted this particular setup with 275 pips stop loss, that automatically means that your risk on this particular trade, even if you use the lowest lot size in forex, which is 0.01, it will give you what? That means you are risking $27.5 on just one single trade. Now, I dropped another setup yesterday. That one had like maybe 350 pips stop loss too. Now, you wouldn't blame me because this is gold. Gold is volatile. Gold is extremely volatile, right? And because gold is volatile, you can't be getting tight stop loss like all those EURUSD that you people get 10 pips stop loss, 15 pips stop loss, 10, 20 pips stop loss. You can't get something like that because gold is extremely volatile. But don't forget that the same way it is volatile, that's the same way when it comes to stop loss, that's the same way you can also make a lot of profits from gold. Like it is fast money or fast loss too. Now, if you use 0.01 lots on these two, what are you going to be getting? That means you are risking how much? $35 on that trade. Now, just yesterday, your risk would amount to like 62. Is it 62? Yeah, this would be like $62 out of your $100. That's $60.5. Now, it means that you just trading yesterday, you are putting $62.5 at risk from your $100. That is you risking 62% of your capital in just one trading day. And unfortunately, if it is a bad day for you, for example, market just decides to misbehave that day, you discover that before you know it, you have wiped out all your accounts, right? A lot of you still want to trade gold. You want to trade gold because you know that gold is fast money, but you have not been going about it the right way, especially because of your small capital. Now, for someone that has probably $2,000, $5,000, that person wouldn't be scared about risk management because the person would see a fine setup and will still risk 1% or 2% of his account per trade. Whereas for you that has $100, just one trade, you're already risking 27%. You're already risking 35%. Now, for days that probably you have two losing trades in a row or three losing trades in a row, that's how you blow account and then you join the category of people that has been shouting that forex is calm. Do you understand? So you've been going about it the wrong way. So now, what is my advice for those of you that don't have high capital? My advice is that if you insist, yeah, you can still trade gold, right? If you insist that you love gold, especially because gold obeys your structures, your demand, your point of interest, your demand zone, and it is rare to find it in currency pair where there are a lot of manipulations every here and there, right? Now, if you want to trade gold and you have low capital, the best you can do for yourself is to convert this capital to, oh my god, what did I do? The best you can do is to convert this same $100, convert it into a cent account. That means you no longer have $100, you now have 10,000 cents, because $1 is 100 cents. $100 means 10,000 cents. Now if you are trading with 10,000 cents now, it's very convenient for you when you want to calculate your position size, right? So it's convenient for you to put your account balance as 10,000. Now your account balance is no longer 100, because we are talking about 10,000 cents here, so it is now 10,000. And your risk percentage, let's even imagine that you don't still want to be so conservative, you still want to risk at least 2% of your capital. If you put 2%, your stop loss value, let's imagine you use 350 pips stop loss. And euros USD, you can use euros USD to calculate for gold as well, because USD is the quote, and then you click on calculate. Now it's telling you that the amount at risk is $200. Now this $200, in your mind, this is just showing $200, but because you know your account is not in dollars, it is in cents. So this means that you are risking one trade, and 200 cents is just $2. Can you see that it start making sense? So with just that $100, you are risking $2, despite the fact that you have a stop loss value of 350 pips. And it's telling you that the lot size you should use is 0.06, 0.057, approximately 0.06. So then you now go back to your chart and place your order. Now risking that, you're only going to lose 200 cents in case the trade hits stop loss, right? Now 200 cents is just what? It's just 2% of your capital. Now that start making sense. It makes sense, right? So you see that even if you want to trade gold, you can still trade gold as a profitable trader with your low capital. You can trade gold in the right way. Now it is convenient. Some people would feel like, okay, 200 cents is just $2 and it's good. When will I start making the money? If you want to be risking 27%, 35%, there are some setup I've posted in the Signal community that has like maybe 400 pips stop loss. That has, I think I've posted one that had like 500 pips stop loss on gold. Now for you with small accounts, with $75 in your account, with $100 in your account, if you place that trade just like that, you'll be risking $50 on one trade. It is dangerous, because that trade could be a losing trade. It is possible. The market is nobody's father's business, so loss is inevitable. But the most important thing is that your profit should exceed your loss, and that is why we're having a risk to reward of 1 to 5, 1 to 9. I think I posted 1 to 8 yesterday, because eventually that our reward will give us an edge, and will still eventually come out after every month profitable. Do you understand? So this is the best way for you to trade, especially if you are a good trader. If you don't have that kind of capital, convert it to cents and be risking it in cents, not in dollars, right? So that you don't risk more than 1% or 2% of your capital on that single trade. And saying that, after that, I would like to do a review of the setup that we did the last time, and then the one we did yesterday. Okay, but I need to be sure that I'm still connected. Okay, so if you can hear me, can you drop a reaction or drop a comment in the chat? Okay, you can hear me loud and clear, drop a comment in the chat. All right, so a quick review of what we did, the setup I posted in the community yesterday. Obviously from the daily time frame, you can see the market has changed direction to the downside. You can even see that we can have a break of we had a break of structure to the downside on the daily time frame. So that only means one thing: market has a bearish sentiment. So going into the chart, I wouldn't be looking for a bull. You can even see that the last 1 2 3 4 5 6 7 8 9, the last 8 candles was bearish, right? It was bearish. So market has a full bearish sentiment, especially on daily time frame. So when I go to my H1, I want to be looking for a selling opportunity. I don't want to be looking for a buying opportunity. I want to be looking for a selling opportunity now, right? And okay, a quick review of the one we did yesterday. Let me quickly get there, because I feel that I need to explain these things to you guys. I think it was on the 5 minutes time frame that we got the setup. Okay, so let me do that the quick review. I think the sentiment yesterday, 1 second, loud and clear. All right, perfect. So the sentiment yesterday was to the downside. In fact, today the sentiment is still to the downside, right? And then I saw that market is making series of lows, higher highs, lower highs, lower lows, lower highs, lower lows. And then there was finally the last one, a break of structure to the downside over here. I'm still doing, I've not started analysis for the week. I'm just doing a recap of how yesterday played out. And then I really want to use it to explain something about risk management for you guys. So there was the break of structure to the downside, right? So now I saw two things. I saw this particular one as well yesterday. I saw this particular one yesterday. Looking at it again now, I think I shouldn't even have considered it, but that's not a big deal. So I saw this one yesterday and I marked out my point of interest right here, which is the last balance candle that gave birth to the imbalance. Okay, the last balance candle that gave birth to the imbalance, and obviously there was a fair value gap at this point. So I marked this place as my point of interest. But this break of structure was not the main one. The main one was up here, right? This was the move that started the break of structure to the downside. This one was just an inside move, right? So that was why, but I was skeptical. I didn't want to miss out on some short entries. That was why I marked this place as well as my demand zone, my supply zone. Oh my god, demand zone, no way. As my supply zone. And then I also saw my fair value gap from here to here. Although my fair value gap has been tapped into, but then my supply zone is still intact. So what I did was I positioned a short, I had a short position here. I think this one was the one that had like 270 something pips. Okay, this is like 210. And then I had my take profits at this downside. I think I was targeting 1 to 9 on this trade or so. 1 to 9, thereabout. Okay, so that was the first one. And then the second one, obviously, I had my short position to here. My stop loss above. I think this one was the 340 something pips. And then my take profits to this same downside. I think this one I was targeting 1 to 8 or so. I can't remember too. So this was my two setup for yesterday. This was one I sent to the group. You can even see from the picture I sent to the group, we had two setups over there. Okay, And what happened? My first order, my first sell limit order was it triggered, it was straight to stop loss, and it was a stop loss of about 200 and something pips, right? But the second one was activated, and I was so fortunate because that second one didn't hit stop loss, and it started going back downward. Now back to my lesson on risk management, which is why I'm even going to this. Yesterday the first setup went into stop loss, right? Now for me I risk about, okay, for me I risk like 5% of my capital per trade on gold. But don't, like, just pretend as if you didn't hear that. Still focus on your 1% 2%. Like, block your ears and pretend as if you didn't hear that, because it takes a lot before you can be risking 5% of your capital on one trade, right? That means you are already giving the market the chance that you want to enter 20 times, and within that 20 times you want to make profits from that 20 times. Because if you risk 5% and you lose 20 times, your capital is gone, right? So pretend as if you didn't hear that, guys, okay? So I risk 5% per trade, and look at what happened. The first trade hit stop loss, bam, 5% of my capital gone, right? Now let's see how what played out with the second one. Now the second one didn't trigger stop loss, and it went straight downward. Now this one gave about 895 pips move downward. I think it was about, maybe it's this server, it was about 900 pips thereabouts, and we posted it on the group. So don't forget my stop loss was 350 thereabouts. So it means that this market has moved like 1 to 2. So it has moved like more than 2 times my stop loss value, because it moved 895 pips downward. That means for me that I'm risking 5%, I'm already like 12% up from this move downward. Now remember in the last time I went live, I warned you guys that when you are trading these days, learn how to lock in your profit, because gold is erratic. Like I said, like Don Jazzy said, it is forming most high. Right? So you never can tell if you're going to achieve that full take profit. So before you achieve that full take profit, you want to take out, I said this same thing last week, you want to take out some profit and keep, right? That is your insurance on that trade. That is what you fall back on. Now 5% was gone. I don't want to open another 5% up just like that. So immediately, especially anytime I get 1 to 2 risk reward, 1 to 2, normally my IRR for this trade is 1 to 8, right? That's like 5% to make 40%. I want to use 5% of my capital to make 40% of the capital, right? Now I was already 1 to 2, like 1 to 2.5% up. So that's like what? That's like 1 to 5 to, that'll be like 5% to 12.5%. So ideally I was already 12.5% up. Now what did I do? It was easy for me to decide to close half of this profit. I decided to close half of this profit because I've already done more than 2%, 2 times my stop loss. So I closed half. Now closing half means I close around, I think I closed around maybe 6% or so. So I closed around 6% and I kept it. Now what does that mean? Logically, if you think about it, that means I already have 6% of my capital locked in because I closed half of a winning trade. Now that 6% is my insurance on this trade. Don't forget that the first trade was 5% loss. I don't know, maybe we are spending too much time on risk management and money management today in class, and I think it is important for you guys to learn that, especially in this market condition, right? If you are following me, don't hesitate to drop a chat in the comment section. Okay. Now, so what just happened? I lost 5% first from this first or the supply zone that was broken, and then I've closed 6%. That means I am still in profit for that day. Now, anytime I close half of the profit, two things are involved. It is either I move my stop loss back to break even. Now, if I move my stop loss to break even after closing half, that means I have locked that trade. I cannot lose again on that trade because I've closed half of the profit, and at the same time I am putting in that okay, once price goes back to break even, it should end my trade. That's a bad trade. So that means the profit on that trade will be the half I closed, right? But I only do this once in a while. It is not every time I move my stop loss to break even. I just want to it only when I see market condition, I see what is happening, and I want to be greedy with this profit I've made, and I don't want to lose it. Then I move it to break even. But as at yesterday, I didn't move it to break even. My stop loss was still where it was. So my stop loss was still there, but I know that I've already closed half. Now, all things being equal, if I had not entered this first trade, this half means I've closed 6%. So even if market now goes back, don't forget that I've closed half of my lot size. I've closed half of my lot size already. So if market goes back to hit this stop loss, it will not be the full stop loss that it will hit. It will only be half of the stop loss. And I risk 5%, right? So half of 5% is 2.5%. So the risk is now 2.5%. So what does this mean? It means that if this trade goes back to its stop loss, I'm only going to be losing 2.5% on this trade, despite the fact that I've closed 6% already, right? So it means that if let's imagine that I only place this trade, let's forget the first trade. That means that I closed 6.5%, 6% half profit, and the trade now reversed to hit my 2.5% loss, stop loss. That means that on this trade I still made about 3.5% profit. Can you see that that makes sense now? But based on what happened yesterday, because I already lost one here, that's 5%, and then market went back to hit my stop loss of 2.5%, right? So that means my total loss yesterday was around, I think this one was one, this one had one left, one plus one minus. Let's do the calculation together, guys. Let's do it together. Let's do it together. Let's do the calculation together. So lost 5%, made 6%. That means we still have a profit of 1% hanging, right? And then the market eventually hit a loss of 2.5%. So that means yesterday was a loss of 1.5%. Can you see that? Now that makes sense. Loss of 1.5% is just a fraction of my capital. I mean, we are going to the market again today, right? And there will be profit again today or not. But I'm still I'm still in the game, because 1.5% of loss in your capital, you still have 89 is it 89? You still have 98.5% left. 98.5% left of your capital. Now look at this analysis I did compared to the first one I showed you. If you had just placed trade anyhow, you would have risked 60 something 0.5% of your capital yesterday and put it at risk. Whereas you're supposed to trade the right way, which is, see, it doesn't matter any strategy you use in the world. because forex trading is actually not about your strategy. No, it doesn't care about your strategy. It is you. Your strategy is in your head. It is you that know your strategy, and your strategy is meant to give you an edge in the market. Your strategy is just meant to give you an edge. What eventually keeps you in the game is your money management skill. And that is why you see people like me, even when trade hits stop loss, I'm unbothered because I know that my profit, my strategy is sound, and I'm going to have more winning trades than losing trade. I've seen trade that hit full TP of 1,500 pips, 2,000 pips, 1 to 7, 1 to 5, 1 to 4. Like this year, we've been taking that kind of profit. So when you now have an unfortunate Trump market like this, you just want to also position yourself and be sure that that market doesn't take you out, it doesn't wipe you out. So in this time, that is how you trade. See, if you are still struggling with risk management and it is still probably eating into your account, just what I showed you today is enough to change your trading game. Is enough. Is enough. Don't be putting on, because you have that leverage, don't be putting unnecessary pressure on that your small account. Market doesn't care about you. Market does not know you. It will wipe out your money easily, cleanly, without even looking back. The market has a daily liquidity of 6 points or 7.2 trillion dollars. Now that kind of liquidity, how much is now your $100 or $200? Market will just eat and chop and clean out. It will just eat it and boom, you're out of the game. But you want to trade reasonably. Now, for those of you that are in the business of flipping accounts, probably that $100, your plan is to turn it to $1,000 so that you can withdraw and probably eventually change that 100 phone to iPhone. So, don't mind me. But if that is your own plan, now you see that for you, your case is different. You are no longer trading like a consistent and profitable trader that you should be. You are just an opportunist. You just want to take advantage of the opportunity in the forex market to quickly change that your status, right? Is it possible? Yes, it is possible for you to be like that, but then it will only be with luck. Because what if at that time that you enter the market is not favorable? That's how you just lose all that money. But if you want to build consistency in this game, you want to build your skill in forex, focus more on money management, less of all your snake in the monkey shadow strategy. Focus more on your risk management, and then you see how your trading journey is just going to be, it's just going to improve. Now, for people that used to be scared, gold is volatile, gold can wipe your money away. Can you see that even with gold, your money is still intact? Because you are smart enough to convert that small capital into big by converting it into cents. Now you have enough room for markets to play around. You have 10,000 cents. Now 10,000 cents is $300. It doesn't make sense because at the end of the day, if you made 3,000 cents profit, that is 30% of your account, right? 3,000 cents is just $30 profit. It doesn't make sense, right? But at the same time, you are using that to build consistency, because eventually, I always say this, that your money cannot make you rich in forex, right? And for those of you that also haven't gone through my proper training, this is a prototype, this is an example of how my forex training looks like, right? I don't show, like, yeah, there is a lot of possibility in the forex market. The forex is a business that is highly scalable, and you can move from small capital to a large capital. But then it is also a business, and it should be treated as such. It should be treated as such. So this is a prototype of how my training program looks like. So if you have not even joined our in-house community, make sure that at the end of this live, reach out so that we can show you the right way to trade, not the social media way to trade. Let me give you an instance. I'm doing a challenge, $10 to $1,000, right? And I'll be honest with you, I've blown like 5 accounts trying to do that, because I'm trying to move $10 into $1,000. That means my risk on that $10 is going to be a lot. But I'm only doing it for social media. I'm not doing it like the way they should trade, because I'm sure that some of you, right, if I post $10 to $1,000, a lot of you will run to me and say you need to learn how to do it too, right? So that's like a social media strategy, and when you see people do it out there, it is just an avenue for them to bring people into their business. It is not like the sustainable way of trading. Okay, so social media trading is different from the real trading. So if you actually want to get involved in the real trading, you should you should find a way to contact us, and we'll teach you the real thing. All right, that said and done, let's do a quick market outlook for today. What am I looking for on gold today? All right, so we have few minutes to go, and I'm still sure that I will still be able to do justice. I will not be explaining so much on order block, imbalance, balance today. If you are new to this live, make sure that you go and watch our previous live session. I've done justice. I've explained all those terms there, right? Then before we go, once I'm done analyzing gold, if there is any setup that you want me to analyze for you, probably something that you're looking at the moment, feel free to drop it in the chat box so that I'll check it, and then boom, we'll analyze it together and position together there. All right, so what is gold saying today? What is gold saying today? So you know how we do it. The first thing we do is to go to the daily time frame. Now, daily time frame, what can we see on daily time frame? We can see that market is a downtrend. Like I said, there is a break of structure to the downside even on daily, and a break of structure means something. Market is still going to be rallying downward, and even despite the fact that yesterday market pushed downward, but then there was a spike back upward, right? But then today's candle has opened and it is still facing downward, so I'm still going to have a bearish sentiment on gold, but bearing it in mind that markets can shift. There might be a change of character on the lower time frame, which I might still key into. For example, if there is a shift to the upside on the lower time frame, I would want to take a quick advantage of that. Now let me give you a simple scenario. If market is an overall downtrend on D1, I want to be looking for sell scenarios. I want to be looking for supply zones. I want to be looking for an opportunity to go short on lower time frame, because the trend is your friend in forex. You must learn how to always follow the trend, right? So that being said and done, if I now see a quick opportunity to buy, probably I see a change of character to the upside on lower time frame, you know what I'm going to do? I'm going to still position myself, but I wouldn't be thinking of taking 1 to 8, 1 to 7, 1 to 6 in that kind of market. I'll give you a simple scenario. Let's imagine that we have a slopey ground like this, and we have one person here, and we have another person here. If this is a slopey ground, right, and this particular guy right here, now this particular guy right there, it is easy for this guy to move downward, very convenient, and get to this location, this second location. But it is very difficult for this guy to move upward, because it takes a lot to climb a slope upward. So even if I want to take the same thing with forex, if market is an overall downtrend, you want to go and join the trend, because it is easy for market to push to your take profit on a lower time frame. But then if market is a downtrend on higher time frame and you want to buy, even if you want to do that, you only want to take a little out of that buy position, because the overall sentiment is still to the downside, and before you know it, market can just turn downward again. So if you want to position your buy position on the lower time frame, make sure that it is just fragile a little. Take that little run out, because the overall sentiment is still to the downside. Okay, that being said, we're going to move straight to the lower time frame now. So of course we start our analysis on H1 on the 1 hour time frame. And what can you see on the 1 hour time frame? I think let me just delete all these ones for yesterday. So the first thing you are going to be looking for is market structure on the lower time frame, and of course the last one was still here. The last break of significant break of structure on the lower time frame on the H1 is still around this point, and the move that started that break of structure started right here. Now I know some of you will want to look at it for it here, but then the move didn't really start here because I can still see a balanced market here, markets ranging at this point. Then before we now add this, and then of course we add our fair value gap from here to here, and boom, that's all. Okay, so my position right here is still to short from this level and to put my stop loss somewhere here. But now look at this, guys, because gold is gold. This is about, I'll put my take profit here. Now this is about 900 pips stop loss. This is 900 pips stop loss to make 5,000 pips. This is a lot. I'm still going to keep this order, this level intact. I'm going to keep it because it is about your stop loss value does not matter. The worst that can happen even with your is to put stop loss is 920 pips and click on calculate. It's telling you that you should use 0.02 because you have converted your account to cents. So it's not a big deal. You are still within your risk. That 920 pips is still going to take just 2% of your capital, irrespective. So I'm going to keep this position intact, right? But then we want to look for shorter positions on the lower time frame. So I'll start from the 15 minutes. So what can we see on the 15 minutes? Although I can see a break of structure to the upside, I can see a break of structure to the upside, and at the same time I cannot see a break of structure to the downside. But this market has been ranging. That's what I say. Like, it's very difficult for you to see perfect structure these days. Okay, so saying that, the next thing I'm going to be looking for is my supply zone, but I can't see anyone significant at this point, so I would rather go to the 5 minutes time frame to look for it better, and then looking at it right here, I can see this. Okay, I can see this, although right here I can't spot any significant balance candle up here, right? I can't spot any, but at the same time I think this could be something to reckon with. Okay, this could be something because I can spot this. Is the same thing we saw the other time. I can spot this balanced market, and then the imbalance started from here, and it also left a small fair value gap, right? So I'm going to take this away and mark this place as my new point of interest, and then of course I'm going to be setting my short position, putting my stop loss above these candles, and this is just about 232 pips, and then putting my take profit right here. So this is going to be a quick 1 to 5 for today, right? But don't forget, this zone looks weak. if you mere looking at it, you will see that price didn't really push away from that point of interest very fast, right? The supply zone is not so strong, so I wouldn't want to place all my bets on this zone. But then your strategy is your strategy. Once you see your strategy, it doesn't matter your sentiment, you have to apply it, right? You have to be as rigid as that. All right, so is that all? Is that all for on gold? Could that be all on gold? Could that be all on gold? Okay, I think that's just my position on gold. So let's quickly lock in these orders, guys. Let's quickly go and set our pending orders now. So we have sell limits. If there's any setup that you want me to analyze now, this is the best time for you to drop it on the chat. Okay, so feel free to drop it on the chat if there's any setup you want me to analyze, right? Drop it in the chat so that we can take a look at it together. All right, so sell limit at, for those of you that don't know how to use TradingView to lock in your trades, your sell limit is at 4,428.21. Stop loss is 4,451.47. TP is 4,311.88. Our risk to reward 1 to 5, and that is it, guys. So feel free to go and lock in this trade, and let's see how it's going to play out. I think this should play out very soon, probably before noon. We should get a trigger if markets decide to respect it, and if it doesn't respect it, there is another level up here. There is another one up here. There's another point of interest up here, but I wouldn't want to take this seriously for now, because the last break of structure on this time frame was right here to the downside. So I'm just going to leave it, right? I'm going to leave it and pretend as if this one is not there. But then if my stop loss is it is possible there is a very high tendency that I might be locking in another trade at that point. But definitely I'll post that on the group so that you guys can lock into that as well. All right, should we pick one more before we go? Let's see if we can pick one more before we go. BTC, let's see what's happening on our favorite BTC USD. Then last week the analysis we did on BTC USD played out nice. I think we got about 1 to 3 or 1 to something before market decided to reverse, and by then we've already closed out and made significant profit. So let's start our analysis again on daily time frame. So what is BTC saying on the daily time frame? The overall sentiment here is, I think, the same thing with last week. We are still having both sentiment. It could go up and it would come down. So we are just going to be marking, looking for market structure on the lower time frame, right? So what market structure can we see here? On H1 there was a break of structure to the downside, and I think there's a change of character now to the upside on H1. There's a change of character to the upside on H1. Okay, this was last week trade, and you can see that it went up. I think we closed about 1 to 2 before it started going back downward, right? So this change of character, it means the market is breaking out to the upside, right? So let's check for better view on the 15 minutes time frame. Now looking at 15 minutes time frame, I'm so tempted right now to just use my chart patterns I'm so tempted to use chart patterns right now. I am so tempted to use chart pattern right now. I'm so tempted to use chart pattern right now, but then that is not the strategy that we are working with. You know, chart pattern is so serious, it's so simple because it doesn't matter the level it goes, it's just about break and retest, and then you get into the market and you keep riding. So on the 15 minutes time frame, don't forget on the H1 there is a change of character and a break of structure to the upside. So I have a bullish sentiment on BTC for now. I have a bullish sentiment on BTC for now. And you can even see on the 15 minutes time frame, this level has been broken. There is this break of structure here, right? And that's the last significant break of structure, right? So where is my zone going to be? Where is it going to be? I think the move that started around this zone. So I'm not going to be marking this place as my other block, my demand zone. I'm just going to be marking it as a support level, as a support zone, because I can't see a proper balance candle before this. So it means that when market push to this place, I'm not going to set any pending order. I'm still going to be waiting for reactions on lower time frame. I'm going to be waiting for reaction on lower time frame. Oh, then I can see something clean on lower time frame. I can see that there is a balance candle right here on lower time frame. So on M15, on M5 rather, I think I'll be locking in a trade on M5. I'll be locking in a trade on BTC USD, a long position. Okay, putting my order here, my stop loss at this range, and my take profits up here. My take profits up here. So this is already giving me 1 to 7. I think I'm going to drop the full setup of this in the Telegram community. So that's that on BTC USD. So guys, is there any other market you want me to analyze? Okay, I think you guys are good. Are you guys cared about Trump market or what? Or you don't plan to trade today? All right, so that's the market outlook for the week, guys. Yes, there's still going to be more, right? There will be more setup before the end of this week. And usually I drop those setup in the Telegram community. So if you are not there, make sure that you join our Telegram community to get updates. And then we also drop updates on our analysis, right? We also drop updates on the analysis that we do on this live session. Okay, so I think on this note, we're going to call it a day and I think if you have any other question, feel free to drop it in the DM. Feel free to contact us on Telegram. Feel free to contact us on WhatsApp. And I guess I'm going to see you in the next one. Thank you so much. Please don't forget to like and subscribe to this channel so that anytime we go live like this, you don't have to be reminded on the group. You just get the notification straight and then boom, you connect and enjoy free analysis, and then we make money together. I think BTC USD played out well last week. After our session, we made some profit and it was a good one. And I hope that our goal that we've locked in today again is going to be a sweet one. Thank you guys for connecting, and I'll see you again. I'll see you guys again soon. Okay. Just showing $200, but because you know your account is not in dollars, it is in cents. So this means that you are risking one trade. way to trade. Let me give you an instant. I'm doing a challenge, $10 to $1,000. In this time frame, don't forget on the H1 there is a change of character and a break of structure to the upside. So I have a bullet that we do on this live session. Okay, so I think on this note we're going to call it a day and I think if you have any other question, feel free to drop it in the DM. Feel free to contact us on Telegram. Feel free to contact us on WhatsApp. And I guess I'm going to see you in the next one. Thank you so much. Please don't forget to like or subscribe to this channel so that anytime we go live like this, you don't have to be reminded on the group. You just get the notification straight and then boom, you connect and enjoy free analysis, and then we make money together. I think BTC USD played out well last week. After our session, we made some profit and it was a good one. And I hope that our goal that we've locked in today again is going to be a sweet one. Thank you guys for connecting, and I'll see you guys again soon. Okay.